Morning, everybody. Well, welcome to first workshop of the week. We are in a very sort of, large state of flux, really. A lot of people I speak to say that the trading's fine. You've just got to be careful. You've got to remain disciplined. We're always sort of looking over our shoulders, just sort of wondering when there's going to be some sort of political announcement. I mean, look what happened on Friday after the European market shut. We got all this fiscal cliff chat going on, and suddenly optimism abounds that the fiscal cliff talk's going to result in some sort of a resolution. Do you remember we're talking about this, the fiscal cliff, the need to sort out the possibility, if it isn't sorted out, the US having some sharp spending cuts and tax rises hitting middle America, really. And it's obviously sort of ideologically based, really. You've got the Republicans not wanting to have the rich soaked with tax rises, and the Democrats really wanting the rich to pay a fairer share. I think there's both arguments carry quite a bit of weight, but as ever, they need to juggle it. Big problem is really taxing the rich is not going to solve the problem. The bulk of taxes are paid by middle earners, of course, and thereby hangs part of the problem. Right, last week, well, you would probably know that equities were pretty weak. The US markets have been weaker than ours, really. But actually last week in the end, we had a bit of a bounce in the Dow. The FTSE was down about 160 odd points, so that's just under 3%. The Dow was down about 230, which is 1.75%. Gold and crude, not much. I think gold was off about sort of $15, crude off about $1. That's what's just less than 1%. The euro actually made a little bit of ground against the dollar. Cable slipped the other way, as anyone who trades euro sterling will know. And bonds, well, they were a little bit higher, really. Okay. Well, there you go. Pelosi and Obama 4C deal. That sort of sums it up. Pelosi is the leader of the House of Representatives for the Democrats, I'd say, but in a minority, of course. Yeah, they said they can avoid it. So confidence is building, and that's followed over into Monday morning's session here. So any of you who'll see the FTSE, we're up, sort of 45 points at the moment. S&P futures, even following the sharp gains on Friday evening after we shut in Europe, still up 3.5 points. So interesting moves. Japanese elections, yes. Who trades the yen? Yes, we've got a few people trading yen crosses. You will have seen the effects on the yen. Let's have a quick butcher's hook at that. Where do we go? 15. That's the one I want. Yen traders amongst you, I'm sure there are. You're not making yourself known just at the moment. Jap yen, let's just have a look at... I just want to look at the longer term charts. Yeah, there's a few here. Yep, okay. Thanks, guys. Well, basically what's happening is these elections, I think we got elections, I think it's on the 16th of December. There is a strong possibility that if let's just work it out, who's going to get in? Okay, most polls. Okay, this is this chap Shinzo Abe. He's the opposition leader. That's it. He's basically calling for unlimited monetary easing. If there is unlimited monetary easing will help the economy, help Japan out of its deflationary cycle. But one of the effects is to weaken the yen, and the reasons why the yen is weakening is because of that fact. This general election, although the current central bank governor, that's the Bank of Japan, they're not very keen on this unlimited easing, but the chances are if this chap Shinzo Abe gets in, and polls are suggesting he's going to have a large victory for the Liberal Democrat Party, and then it suggests that the Bank of Japan is going to be told to toe the line. So one would expect the Nikkei to rally on the back of that, which it is doing, and also the yen to fall away. And that's basically what's happening. A weaker yen obviously is very, very good news for the Japanese exporters who've been struggling over the last, God knows how many years, really. So that's really the backdrop there. Other than that, obviously, we've got this really unfortunate situation brewing in the Gaza Strip. God knows why it always gets to this. It is David and Goliath. Let's hope they can have some sort of cessation and let people talk and get it sorted, because it is an absolute nightmare, just unnecessary death, which should be avoided. But that is destabilizing what is still a fairly fractious and volatile Middle East, despite the fact that there are reports stating that the US could become self-sufficient in energy in the next sort of decade or two. It still requires to import the bulk of its oil from the Middle East, and so the Middle East is clearly very, very important, and that's one of the reasons why crude is sort of being underpinned a little bit at these levels as well. Okay, well, as Adrian says, it is a shortened week. We have something called the Thanksgiving celebration this Thursday. Any of you know what happens over Thanksgiving? It's, a few people know. Well, it's a secular holiday. It's not a religious holiday. So everyone, whatever race, creed, colour, has celebrates on Thursday. The markets get very quiet. The Wednesday sessions, some of them close early. We're then shut Thursday, obviously, and then Friday, a lot of the commodity markets, futures markets are shut as well. The stock market will be open, but it does mean that trading is going to be thin, really starting Wednesday, sort of early afternoon, really. It'll be pretty quiet. Obviously, Thursday, very quiet with the US being shut. We're open. Europe's open, that's fine. But with the US shut, liquidity and volatility, everything else will be a lot quieter than usual. And same thing Friday, so it will affect sort of like 2.5 days. Good luck this week, and thanks very much for listening, and we'll be back with you, I think, on Wednesday. Cheers.